Hey traders, welcome back to my channel. My name is Desmond Samuel and I am back with another episode of our weekly Forex Forecast. So we have the euro dollar here being the first pair here, and as you can see, I have highlighted this guy to the downside in our previous weekly episode of a weekly Forex Forecast. So like I said that I was calling this guy to the upside in a recent episode, and then I was highlighting this guy. I said, okay, fine, all things being equal, we should see this guy, pull back into this already created, level somewhere around here. But for some reason, the market just seems to be stalling and then just being around this demand level here for quite a long time now. We have three things here to think about here. So we have, obviously, we are in the holiday seasons. We have low volatility, and then we have the FOMC interest rate decisions coming up, in the coming week. So what I should be looking out for, or what you should be looking out for here, is very, very simple. Allow the interest rate, because from Monday, Tuesday, we could actually see some more sideways movement, and then post FOMC we could see the actual direction of this market. All right, so now two things here. If you actually remain above here and then we actually pull back here, I expect this market to come back into this level somewhere around here, like so, give us a decent bounce, all right, a decent reaction off of this level. Then we can actually go ahead to execute on our sell trade. However, that is provided that this guy stays above this level here, provided that this market gets here and then stays below this level around here. All right, so if for any reason the market just fails to remain below this green bar and then it breaks above here, then we would definitely see this guy reverse to the upside. Then I'll be back here to let you guys know what's up. All right, but this all boils down to the FOMC interest rate decisions. If we actually see the market break above here, then I'll be back here to let you guys know what's going on. However, in the event that we actually still remain below here, I do foresee that this guy would actually maybe collapse further here. So two things is either we come into this green bar right here, or we collapse further from this blue bar and then pull back to actually fall even further. What I mean is this: look from the weekly time frame here. We're sitting on this blue bar here. All right, so this is a major level. As you can see, this level has been very difficult to break below. How do you know? Just look left. All right, just look left, you see that this guy has held significantly. So now what we need to see is very, very simple. Is either we see the market pull back from here, or we actually see a further collapse. So if you see a further collapse from here, it's very simple. What you need to do is just look for a decent consolidation somewhere around here with a decent entry criteria, then go ahead and execute this trade, then hold. And please, whenever you're selling the market, always target your recent lows for sells and recent highs for buys. All right, I kid you not. Always this is the weekly time frame. You scroll down to your daily time frame 4 hours and we look for the recent low and then the recent high, and then take your profit, especially in this festive season where every single person, they are planning on going on holidays, or they've already gone on holidays. You have very, very minimal, little to no volatility in the market as well. So what you don't want to be doing is holding on to trade thinking 500 pips for 1,000 right now. No, look for 30 pips, 40 pips, 50 pips, and then you're out of the market. Just scalp and go. Then when we're back, Q1, then every single thing will kickstart again. But for the time being, as far as euro dollar is concerned here, my target, if we do break below this blue bar here, this green bar somewhere around here, that's parity. Now, in the event that we actually, maybe fail to collapse further and then we actually pull back in here, this will be the next point I'm looking to solve this guy from. Either ways, I'm favoring this guy to the downside to the tune of 70% and then 30% to the upside. So the next pair on my list now is a pound sterling. Now from our previous episode, I actually spoke to you guys. I said listen, two things could happen. It's either we could actually come in here and then pull back, or we could even break further and then use this as a supply level. Now in this case here, this is how things look. I'm gonna head to give a fake out here, and you guys know that after a fake out comes an exponential move in the opposite direction. Now in this case here, this is how things look. We have actually be putting in this candlestick pattern somewhere around here. Now this is a solid bearish candlestick pattern. In the event that if the next weekly candle closes bearish, we are definitely melting all the way back down here. This is a reversal candlestick pattern. All right, now in the event that that doesn't happen, I have two things here at play. So I could actually wait for this guy to pull back into this green bar here and they look for a decent entry criteria and execute, or I wait for the guy to come in here, come into the blue bar, then pull back into this created supply level somewhere around here, and then we can actually go ahead to execute this guy. All right, simple. One level has to hold. All right, one level has to hold, and in this case here, I'm banking on this other one holding. In the event that this guy should collapse further, then this will be the next level to look out for. That's just how you go about it. All right, so for pound sterling here, I'm super bearish on this guy, and I actually foresee this guy collapsing in the event that the FOMC interest rate decisions come definitely see a collapse in this guy. However, in the event that it comes in negative for the dollar, then we can actually see a pullback into this point here, potentially a rally back to the upside, or a pullback to this point for also actually further execute this guy to the downside. If you found value in this video so far, I urge you to go ahead and subscribe to my channel, turn on the bell icon, and then leave a like and comment there. All right. So the next pair to talk about now is gold. I'm just going to go straight to the point here. So for gold here, it's very simple. All right, we do have on the weekly time frame here. This is where the actual demand level sits at 2,460. This is exactly where it sits at, because if I use my Fibonacci tool like so, from swing low here all the way to swing high, you can see that the demand level sits at 2,460 dollars per ounce. All right, so now get rid of this guy. Now we could actually see, because the market is already giving a lower high from this high here, so we can actually see this guy melt further down into this point here. And then once this is said and done here, I'll be back to let you guys know again, which is why I urge you to go ahead and subscribe, then turn on the bell icon, so that whenever I come to let you guys know when gold is ready, you can be amongst the very first few to get the alert and then come on here and then look at what to trade and look at how to pocket money for the next year. All right, so that's just that for gold. I see no reason as to why gold shouldn't pull back into this region. Then we actually rally to $3,000 per ounce. Without any iota of doubt, I am very confident of the fact that gold is headed into $3,000 per ounce. Either at the end of this year or Q1, we should actually see gold play around $3,000 per ounce. That is my short-term target. All right, so I think that's that for gold. All right, so you guys know that by now I do nothing without my S&P 500. My videos are not complete without the S&P 500. This is like the easiest way to trade, to be honest. Very clear, straightforward, no waste of time, has no biases here and there. It's just very straight, hardly ever influenced by anything. All right, so now S&P 500 now is my my go-to pair. All right, so how it has always been my go-to pair. So now my target for the S&P 500 remains in 6,400 basis points. I see no reason as to why we shouldn't rally into 6,400 basis points. The coast is clear, actually, very clear. What we need to see is a pullback. All right, see one leg down, maybe on the daily time frame here. Let me just give you the daily time frame. So one leg down into the 5,870 region, then we should actually see this guy rally higher to 6,400 basis points. So that region is somewhere around here, is like so, it's somewhere around here. So we need to see the market. Let's watch and see how the market reacts around this 5,870 region around here. If it breaks below here, then we have a second target, which is 5,680. And if for any reason we see a decent bounce off of here, we are definitely headed to 6,400 basis points. I see no reason as to why this should not happen either in Q1 or the end of the year. So that's just that for S&P 500. My prime target remains 6,400 basis points. Again, without any iota of doubt, I'm very confident of this. So the next pair on my list now is the German 30, the DAX index. I see no reason as to why this guy should not rally into 21,000. It's actually a few more pips away from hitting our prime target, our all-time target, which was 21,008 basis points, which I've been highlighting for quite the longest of time here. All right, so I see no reason why that shouldn't happen. The coast is clear, every single thing is clear. This is like a clear freeway. All right, this runway is clear and it is headed to 21,000 basis points. All right, so the next pair on my list now is the Nasdaq, the US 100. All right, so this is also very easy to trade. It's headed in the same direction as the S&P 500. And one of the benefits of trading S&P is that with S&P you can mirror every single indices, like the DAX, the US 30, and then I think Nasdaq as well. All right, so those things you always follow the S&P 500. So if S&P is headed higher, best believe Nasdaq, US 30, and the DAX index will always head higher. All right, so for Nasdaq here, it's very simple. 22,800 basis points is my prime target, this blue bar right here. However, in order for us to see a decent entry opportunity, the market has to pull back into 20,600 basis points. Once I said and done here, we actually go ahead and execute. So you guys should execute and hold your trades, because these guys are actually going to go higher. So wait for a decent entry somewhere around here and hold your trades for the longest. All right, that's just that for Nasdaq. All right, so the next pair on my list now is US 30, which is the Dow Jones index. Like I said, this one is even a lot faster than the S&P and the Nasdaq. So for my previous episode of a weekly Forex forecast, I highlighted this level that the market has to come back into 43,100 basis points, and you can see that is exactly what the market is doing though. So what we need to see is very simple. I let the market come in here and then give us that bounce. Once you see that without that bullish engulfing candle on the 4-hour time frame, precisely 4-hour time frame, we can actually then go ahead to execute this guy and then hold to our overall target, which is 47,000 basis points. All right, so I let the market come in. So you can see that the market is coming in for that third touch of the of the trend line. And so there's a principle in trading that states that the third touch of the trend line always does the trick. And in this case here, the market is coming in for that third touch. So what we need to see is very, very simple. Allow the market come in here and balance out. All right, let it balance out, because all through last week was very, very bearish for the US30s. So let's see the market balance out at this 43,100 basis points. So let's find its bottom, find its balance. So once that is done, you now see a bounce off of there, like a 4 hour engulfing or the daily time frame engulfing. So once that is said and done here, the prime target for the US30 going long is 47,000 basis points. I have no doubt whatsoever. All right, so the next pair on our list now is silver. So I did not execute this trade for some reason. I think I missed it or something. So I did not go ahead to execute this trade because I didn't get the pullback I needed. So like I said earlier, the market gave us a double bottom somewhere around here and then broke out. So what we needed to wait for was a pullback into the neckline, not a drop like this, not a breakout. All right, now in this case here, the market has given us a fake out, has refused to actually pull back. So what we need to do is just sit on our hands and wait, wait it out, because gold is pulling back. That's why this guy is dropping like this. So wait it out. Gold and AUDUSD, they are both pulling back. That's why these two pairs, this pair is actually deep back into this range. So what you need to do is very, very simple. Just wait it out. What you need to do is wait it out. Okay, allow the market finish whatever thing that you want to do here, because sometimes there are some technical criteria that the market just wants to fulfill that you and I can't see at the moment. So allow the market finish whatever thing that brought it back into this range. If provided that silver remains above this yellow bar, I'm still very, very bullish on it. All right, provided that the market remains above this yellow bar, I'm still very bullish on silver. In the event that we do actually break below here, then now I cannot come and then tell you guys, okay, fine, that we are not bullish anymore. But as things stand here, as far as this yellow bar holds here, I kid you not, we are still very, very bullish, and there is every possibility that we could actually blow out into $35 per ounce for silver, which remains my prime target, provided that we stay above this yellow bar right here. Right, so it's very, very simple. Okay, so we had the first touch, second touch of the trend, and this is the third touch. The market is just doing every single thing it wants to do. So allow the market finish everything it wants to do. Let it play around here. Once every single criteria has been fulfilled and they will remain above this yellow bar here, we are actually en route to $35 per ounce and subsequently $48 per ounce. The last pair on the list now is the dollar index. As you can see here, the level is still very, very valid. I'm actually banking on the fact that dollar should actually collapse further to 103, and post FOMC, I think this is gonna happen. However, from Monday to Tuesday, we could actually see some more range, play here, or even higher move, because the market could be going higher to even drop lower. All right, so we just need to watch out for FOMC, see what FOMC holds. If it was the dollar here, we could actually see this guy, rally higher, and if it comes on negative, we could actually see, the dollar collapse right into 103. So they could cut the interest rate, they could hike interest rates. I don't really know, but my job as a trader is to react and not predict. So I urge you to also go guide to actually react or not predict. All right. And that brings us to the end of this episode of our weekly Forex forecast. And that brings us to the end of this episode of our weekly Forex forecast. My name is Desmond Samuel, and I see you guys in the next episode. Peace out.